Major averages on pace for their fourth straight month of gains here. So can the rally keep going, given all the fundamentals we were just talking about? Evercore ISI's Julian Emanuel has an S&P target of 4750. Joins us here at Post 9. You're going to have to raise that target now that we've surpassed it?
I think we're going to hold on to where we are for the time being. Look, if you look, this has been literally a breathless rally since the October lows. 4 months of gains. You look at a lot of these statistics, 15 out of the last 17 weeks, kinds of things that you haven't seen more than once or twice in an investing lifetime. We think it's a time to just sort of catch our breath here and realize that there's a lot of good news baked in a year where, frankly, what we're seeing is a reluctance to short by professionals, the likes of which I've only seen after the meme stocks. And then, of course, earlier in the decade, in and around the tech bubble, which gives us pause. But
you think it's frothy?
It is frothy. The difference between froth and a major turndown is we don't see the economy weakening significantly yet, and that's a good thing. But there are signs of FOMO.
Well, what would they be?
Again, short interest at an absolutely decade low after a run like this. Which actually, if you think about it, stocks that have missed on earnings this morning in the software space, a very good example of having these extreme moves because shorts are afraid to actually take on positions. And then, of course, the converse is the incredible chase of momentum from the AI names. When we think about it, again, particularly given the political backdrop, when things are as contentious as they are, history says that years like this, when congressional control is as tight as it is, that stocks tend to have volatility. We're not calling for an end to the bull market. We're calling for a pause. And we think there are some other more interesting places to put your money.
Other than short interest, what about the overall metrics that we all typically look at, whether price to earnings, price to sale? I don't know. Anything else you might think about?
So they are high. Valuations have gotten to a point where if you look at it on a 1 year forward basis, the average return is zero. Okay. It doesn't mean they can't get higher. It certainly was the lesson that a lot of shorts learned in 1999 and 2000 and again in 2020 and 2021 off of the bottom. But from our point of view, if you're a retail investor and you're feeling as if nothing can go wrong, it's the time when you want to think about rebalancing your portfolio, as asset allocators typically do. We think there are interesting places such as China and Japan where there are actually... China. So from our point of view, you're in the exact opposite situation. Record short interest, record disinterest, bearishness, just when it's likely that there's going to be policy stimulus, and they can because interest rates are so low. We think next week, in fact, Super Tuesday is in Beijing as well as the U.S. There's likely to be some policy stimulus announced then.
We've been waiting for policy stimulus from China for the last year. And there are also geopolitical and structural factors there when it comes to things like offshoring, manufacturing, supply chains, property issues. That has stood in the way of this trade.
There most definitely are. And in fact, we have seen policy over the last 6 weeks. And if you go back to it, though, I think it was a sort of a watershed moment back in November when Chairman Xi was in San Francisco at the APEC conference. He overtly courted American business. That was a signal that there is going to be a renewed focus on the financial aspect, something that had been largely ignored for many years. And we do think, again, when you think about valuations and the fact that it's a market where everyone has sold, we think there's potential upside there.